we're just in front of the best opportunity that we ever had. You got to compare 2024 with 2013 when we were starting. And there's so much difference of an ecosystem. I can give you many examples. For example, let's take Conecta as an example. When we were investing in Conecta, there was not an easy next step for the next financial rounds. Today, if you look into the news, every single week there's new companies announcing their either seed round, Series A, Series B. Just last week, Justo was announcing a Series C of $70 million. And today I saw Fairplay from Manolo Atana announcing a debt round with the Spark. Like there's so many things happening that in 2013 we didn't have. Conecta was built in an ecosystem that was lacking of that. We didn't have that. And
Right.
it happened the same with 99 Minutos.
Hi, everyone, and welcome to La Frontera, a podcast dedicated to exploring the dynamic startup and venture capital ecosystem in Latin America and the innovators behind it all. We're your hosts, Cyrus and Tom. If you enjoy this conversation, we invite you to subscribe to our newsletter where we announce new episodes and share additional insights and resources for founders and investors alike. We'd also like to invite you to share this podcast with your friends and to leave a review on Spotify, Apple, or YouTube to help more people discover the show. We love hearing from our audience. You can connect with us on LinkedIn and Twitter by searching for La Frontera Podcast. In this episode, we sit down with Rene Lomeli Ojeda, partner at 500 Global, who's been shaping the LatAm startup ecosystem from day one. We explore the history of 500 LatAm, how the VC and startup landscape has evolved, and what makes for a great angel investor. Rene also pulls back the curtain on 500's investment process and how they add value. Plus, he reveals the biggest risk international VCs worry about when investing in the region. But don't worry, it's not all caution signs. Rene shares why he's bullish on the next 5 to 10 years in LatAm and why you should be too. Welcome to another episode of La Frontera Podcast. We're here with Rene from 500 Global. Rene, thank you for joining us today. So Rene, we know that you're a partner at 500 Global and you're focused on investing in high impact startups across Latin America, especially in fintech, health tech, HR, and digital transformation. I know that when we met over the summer, you told me the whole story of what your path was to 500 Global. I would love to learn a little bit more about that and how you met Santiago as well.
Of course. Well, first of all, thank you so much for having me. I'm excited to be in this podcast, which, by the way, I love the name, La Frontera. I love that it's in Spanish, the name, and the whole conversation is in English. So I love it. Cyrus Thomas. Okay, let's start with my story. So basically, I've been describing myself recently as a VC by accident. And the reason I describe myself that way is because where I come from is from building community, an entrepreneurship community. But that's 11 years ago when I joined 500. So I was building communities probably in between 2010, 2012. And that's what got me into venture capital by accident. So if we go back 12, 13 years from now, you wouldn't find these two things that come together, which is the community and the capital putting together as startup ecosystem. What we used to have back in the days, it was people like me and other entrepreneurs that were getting together over the weekend because we were basically encouraged to build products. And then on Monday, we all had to go back to our reality, which is how I feel it was happening back then. But we didn't know. We did not know that the next step for that, it was that whatever we were doing over the weekend, and it was more enjoyable than our 9 to 5, it could be our full-time job. At least I did not know that. Yeah. And what was missing back then, it was the actual capital to invest in those entrepreneurs so they can have that as a full-time job from Monday to Sunday, because that's how it actually works. So that's why I always share that my story is a bit of an accident because I was already building that, but I did not know with the other part of the equation, which is capital, we could actually build this as our full-time job. And that's when I met Santiago, and I love that you bring him into the conversation because Santiago actually found out about that a couple of years earlier than I did. He was in Mexico City. I actually grew up in Merida, so we were both doing something similar with the ecosystem building, but at different stages and a completely different scale because Mexico City is a 20 million population. Santiago was doing hackathons over the weekend, and he met this guy that his name is David Wheatley, a very well known guy as well. And David, in one conversation with him, he told him what you hackers in Mexico need is a Mexican VC. And they ended up partnering to do a venture capital fund for Latin America. And in that moment for Mexico, that was called Mexican VC. And they ended up investing in 7 companies. One of those companies is Connected, that I know you guys know very well.
Mm-hmm.
And within that story, one of the LPs of that microfund, because it was a very small fund, a $250,000 fund, it was 500, an LP with 100K within that 250K. And the story is that whenever Santiago wanted to raise more capital for Mexican VC, he went back to 500 basically and asked for if they were interested in investing a little bit more. They were not, because they did not want to be 30% of a fund. And of course, they didn't want to be more than that. But instead, they offer for him to become part of 500 and become the first experiment of building microphones with the brand of 500 outside of the US. Santiago called me the days that this conversation was happening, where the idea was, let's build regional teams that do microphones, regional funds, and they have to do basically 2 things: raise capital from that region and invest in good companies from that region as well. And that's what we ended up doing as the first team outside of the US for 500. And that's how we have a team in Africa and Saudi Arabia, South Korea, Singapore, and many other regions. And I'll stop there.
And I think one reason why we think this is going to be an incredible conversation is exactly what you just said right there, just dealing with investors and companies from all around the world. That's something that I feel like a lot of other investors, especially those focused on LatAm, don't have that kind of experience with. A lot of them have been focused on just specific regions. So that's something that we'll dive into later in the conversation as well.
Of course.
So we do want to also mention that you do have a podcast called Analista LatAm, in which you interview many great angel investors in the region, one of which I know you interviewed Eric. I listened to that one recently. But something that we do want to touch on from there and learn from these many conversations that you've had with angels is, were there any traits or approaches that a successful angel investor in the ecosystem sets that angel investor apart from others in the ecosystem? We're curious to learn a little bit more about what makes an angel investor successful in Latin America. And what have you learned from your conversations?
That's a great question. I actually started this podcast hoping that I could share within the interpretation of whoever is listening that an answer to that question.
Yeah.
And by sharing different stories, right? So up to today, I've released 65 episodes, I think. And it has been a beautiful project, and hoping to inspire others to write their first check as angel investors. And something that I realized is that there's no one definition for an angel investor in our region. So success is also difficult to answer as one definition. And I interview people that have done a couple of investments, 2 or 3 investments, and they recently started. And I also interviewed someone that has done over 160 angel investments. And then I also have interviewed people that will describe themselves as big checks. And they are describing something like $15,000, which I don't know if it fits for my description as a big check. But then there's others that will say I invest $100,000 and they don't even put a definition if it's big or small check. A ton of different differences within whoever is investing in Latin America. And my reflection around this is that one, the angel investor, the best angel investor for an entrepreneur is someone that probably they already know. Last week, I saw a friend that was publishing a survey on LinkedIn, and he was asking if an angel investor is someone that is within your network or not. I believe that it is. And people that disagrees with that is probably not creative enough to think on who they can call, because that's not only family and friends. It's probably one of your ex-managers, a teacher in your university, a friend of a friend. It could be literally anyone. And so the definition of success for me, to go back to your question, is whatever makes the angel investor feels good about writing that check. Within the 65 episodes that I've done, none of them will reply that the reason that they're investing is because of returns. Most of them, first reason is usually either giving back or building a better Latin America for us Latin Americans. And of course, returns is part of the equation, but none of them will bring that as their first answer. So success, I don't think for them is measured by returns.
Yep. No, and I think you can tell that from there's like this comparison with a lot of founders have started to focus on raising from angels. And a lot of that has been because angels usually find conviction in whether they want to invest pretty quickly. Usually some folks will find it in like 1 to 2 calls with the founder. And usually it's because what you mentioned, which is they want to give back or they like what the founder is focused on and what they're building and they want to support them. But usually founders don't have to go through full due diligence processes with angels, even though they will have to answer a few questions here and there. But that's incredibly helpful to hear. And a follow-up question as well for you. This is where a lot of folks have spoken to. There's a big misconception in what defines an angel. And a lot of folks think it's larger checks or they have to invest like large amounts per deal. And I feel like what I've noticed from talking to some other angel investors throughout the region as well, and then also like in the United States, is there's some folks that are even writing like $1,000 to $2,000 checks just to like support friends and founders. And the thing about that is even if you take on like some of the smaller checks, they can introduce you to other folks that also will write smaller checks and that will build up. What have you seen in terms of like 50, 100K for some folks, but what have you seen in terms of like a typical range for what angels in LatAm are typically investing in? What kind of check sizes are they writing?
In my point of view, the most common check in Latin America for an angel investor is going to be within the range of $10,000 to $25,000. Probably an average more closer to 10 to 15. The larger checks, of course, makes much more of a difference.
Yeah.
25K for me, it could be the ideal check size because it not only brings some kind of traction within your fundraising strategy as a founder, and also it actually adds runway. And when you think of an early stage company in Latin America, also you can find a lot of different things, right? But if you are scrappy enough and capital is not that accessible for you, 25K could make a lot of difference. It could maybe give you 3-4 months of runway for a small team. So a couple of those checks can take you to a good place.
Yeah.
1,000 to 2,000, it doesn't take you anywhere. So as an angel investor, you also have to think on how your capital is either de-risking the probability of that same capital. And whenever you're adding $2,000, what's the probability of that $2,000 to get that company to be successful, or 25K or 50K, or if it's coming with other investors or by yourself. So there's a lot of different things to consider. But for me, hopefully we get to see more checks coming in the range of $25 to $50,000. There's one of the interviews that I did with a Colombian investor. She's a friend of mine, and she's investing $50,000. And even though she thinks she's not able to write a ton of those checks because, of course, the her wallet is up to some point, right? She believes that she rather writes 3 checks of $50,000 instead of 10 checks of 15, because then she believes that she's making a difference within Runway and how you help the company to be successful. Some other people will take that same $150,000 and invest in 10 checks, $15,000 in order to build a diverse portfolio.
Yeah. Right.
Depends on whatever you're trying to build. I would rather build diversification than concentrated bets.
So here in the US, like there's a lot of angel networks, syndicates, that type of thing. I worked for one actually called Angeles Investors. No relation to your podcast. So it basically, they have a mission, and that mission is to support Latino and Latinx founders here in the US. But it's a massive network built up of hundreds of angels that put money into the syndicate. It kind of sounds like, though, in Latin America, the profile for an angel investor is a little bit more, is closer to the actual founder, right? It's like a family friend, a former coworker, something like that. And so my question is, does that mean that the founders that are able to raise from angel investors, they typically come from a background that has maybe, more high net worth individuals in it, or is like part of their network? And do you think that's a limitation there?
Maybe you went to Stanford as a Mexican, right? And maybe you have, within 3 phone calls, access to $150,000. That's fine. It's people that you already know. But maybe you didn't have that luck and you don't come from that background. I also believe that you are 3 calls away from your first investor. Maybe that's not $150,000, but your first one, maybe it's already there and you haven't seen it. You haven't asked yet.
Mhm.
And you gotta make the call. You gotta ask. And maybe that means $2,000, not 150. And that's enough initial traction to go in even on the emotional side. And yes, Latin America, it does have a huge advantage if you have a well-connected network. But I wouldn't say that that's the definition of the actual ecosystem. They do come from different backgrounds. And today, if we compare to what we have 11 years ago, there was no angel investors. If you went to LinkedIn 11 years ago, you wouldn't find one single angel investor. Then 5 years after that, we had a few. But today is very interesting because they are a very active player within our ecosystem. Just try to do the search. Go to LinkedIn, type angel investor, and then filter by cities. And that's how I actually met Cyrus, because he changed his location on LinkedIn to Mexico City. And I was looking for angel investors for my podcast. And then do that. Go type angel investor, then filter by city to Mexico City. You will have pages and pages of results. We didn't have that 10 years ago. You couldn't find a single angel investor. So we are, compared to the US, we are in a phase today of building that. And I believe that we will have more people joining as angel investors, and we will also have some of them retiring of angel investments because they didn't like it, or they did it wrong. Or we will also have some of them graduating to the next step, which is building their own funds. Some of them, they will realize that angel investment is way too hard to do, So they will rather stop doing angel investments and start investing just in funds like ours. So I believe that this is just getting started for Latin America.
Right. So in your view, it's kind of a maturity thing, right? As the ecosystem continues to mature and develop, as you see more potential exits and successful founders and that type of thing, then people become more knowledgeable about the space and what the opportunities are and how they can get involved as well. Does that make sense?
Correct. Correct.
So I know you mentioned that you might see some angel investors that they find it too hard to do it themselves, or they might, invest in the fund. Do you see not the opposite, but something similar where you have someone investing in your fund, for example, but they also see great deal flow from your fund, so they might go also and double up and just invest directly in some startups as well? Do you see that as well happen quite often?
Yeah, we've seen a mix of everything. We've
Yeah.
seen those that start investing in a fund in order to grow their network within the VC industry, and then they start doing direct investments. We also have all the way around the angel investors that have invested in a company, and because of the relation with the company, they end up investing in a fund. I think there's a mix of everything. And what I meant with some of them might find it difficult is because I've seen many people that really want to do venture capital, but they do have a full-time job. I would say that's the most regular profile of an angel investor today in Latin America. They have a full-time job and venture capital is a hobby. So they end up investing, let's say, in 10 companies. And whenever they realize that they are already doing some kind of portfolio support, they want to look into new deals. They want to explore much more of their network. So they gotta build a process for deal flow. They gotta go to events. They gotta do all of these things that basically describe a full-time job in VC. Then some of them will find that way too hard for their time commitment today, and they will end up they will keep being involved in our region is through investing in venture capital funds. They can still be part of that same ecosystem, helping companies, but without the hassle of looking into thousands of deals per year, right? So let's talk about people such as Ivan Montoya.
Yeah.
Ivan used to describe himself as a super angel. And then he realized, I put it probably my interpretation into this. You can ask Ivan his whole story. Ivan, Ivan ended up doing this as a full-time job because
Yeah.
he probably understood that in order to do the good investments, deal flow, portfolio support, etc., he ended up doing this as a full-time job. Then what most probably happened to him, as will happen to many other angel investors, is that you don't have as deep pockets as you could have. And then the next obvious step for him, it was, since I'm doing a good job in this, I'm already doing this as a full-time job. Well, let's fundraise and have our own fund. And that's how he ends up doing No Mundo Ventures, right? So either you do that or you support others doing it.
Exactly. No, I like to think about angel investing versus joining a fund as kind of the same thing with the stock market. You can invest in individual stocks, or you can invest in an ETF or a mutual fund where someone goes out and does the research for you. Like they kind of do that full time, because to invest in single stocks, that takes a lot of research.
It's a great example.
And then shifting a little bit to 500. So I would like to talk about how you guys operate. I think you offer investment, you offer funding, but I think there's a lot more to it, right? Like I noticed this summer, right when I started it at Connecta, Hector pulled me aside and brought me to one of your events. You had events like an impact days, right? Sponsored by you guys, where you had Hector kind of talking to some of your other companies, your founders and other founders that wanted to join in. So I think what you guys offer is a lot more than just money, right? And eventually that could be a follow-on investment, but other support as well. So I'd love to hear how you guys kind of describe yourselves as, I think, more than just a kind of VC fund.
I love the question. So we believe that we cannot be neither relevant or successful as investors with just capital. So in order to have a strategy around that, we believe that there's other three verticals where we have to stand up. So there's four main pillars within our strategy. Of course, one is capital, because we need that. And that will describe our main business, which is being a venture capital fund. But then how can you support that within the other three? One of those is community. And in community brings different activities or different efforts that will respond to many. So the community have four main stakeholders: our founders, of course, our team, of course, but also our investors and our mentors. So how can you build things that put together all of these four stakeholders in order to produce more value? And that could mean a lot of serendipity sometimes, but basically all with the same objective, which is how can we build successful companies in Latin America? The other vertical will be code. We believe that we have to develop our own tools. We believe that we need to understand how to develop products internally in order to be good at evaluating companies that are building products. So we must be good at building products ourselves as well. So we can have a very good perspective on how we evaluate companies. We help companies within tech. So let me give you an example of this. AI is something that today you are hearing on a daily basis. Every single pitch will come with, we are whatever with AI, right? So in order to be good at evaluating these kind of opportunities, we gotta build tools with AI as well internally. Santiago, which we already mentioned before, he has been a developer since 13 years old. And for the past 2 years, he has been obsessed with AI and building with AI. And we have this tool that is called Descubre.vc that maybe you have seen, that is a news aggregator. And this is a tool built by Santiago over the weekend or his weekends that is fully built with different tools, but mainly with AI. So that's a good example of how we think about how can we not only understand code, how can we build that, and how can we bring a perspective on how to evaluate companies that build technology. And also building internal tools that will help us be more efficient within how we process deal flow, how can we do better portfolio support, etc. And at the end of the day, at 500, we have over 3,000 investments. So you gotta build internal tools to serve that companies. And then the other one is content. And that's a good example of that is Ángeles de LatAm. It's a podcast that it makes sense for us to build content in order to either bring more investors for our portfolio companies or people that is already investing before us that can refer good info to us, etc. So we believe that at 500, we need to do all of those things in order to be successful and relevant in our region. Because if we have only capital as a strength, there's no other differentiator within what we do. I hope that explains a little bit of your question, Thomas.
No, that's perfect. That's exactly what I wanted to hear. One of the things that I've noticed is that you guys continue to invest in companies here, while a lot of investors have kind of pulled back from the region since 2020, 2021, 22. What has allowed you guys to continue investing in new startups, even as you see like some other accelerator programs and other investors that have a global focus kind of back off of Latin America?
Well, we've been doing this for so long that if you take into consideration what we've seen for over a decade now, this is not scary at all. We're just in front of the best opportunity that we ever had.
Right.
Because you got to compare 2024 with 2013 when we were starting. And there's so much difference of an ecosystem. I can give you many examples. For example, let's take Conecta as an example. When we were investing in Conecta, there was not an easy next step for the next financial rounds. Today, if you look into the news, every single week there's new companies announcing their either seed round, Series A, Series B. Just last week, Justo was announcing a Series C of $70 million. And today I saw Fair Play from Manolo Atana announcing a debt round with the Spark. Like there's so many things happening that in 2013 we didn't have. Conecta was built in an ecosystem that was lacking of that. We didn't have that. And
Right.
it happened the same with 99 Minutos. There was no access for millions of dollars of Series A. Same happened to Clip. Same happened to Confio. So today there is a path for that. In 2021, there was many people investing here and many of them have stepped out. That's true. But we were building successful startups in 2013 that had no access to that. And today, there's more access, there's more investors, there's more sophisticated founders. That whatever is going to happen in the next 10 years, it has to be much better than whatever we have built in the past 10. And today, you can disagree with me. Go out there and you can see the value. Go and pay in a restaurant where Clip is going to show up as an option. Go and receive your text from Amazon delivered by 99 Minutos. That's out there. And if you can't see that, then you haven't seen what we have been building in the past 10 years. So whatever it's coming next, it has to be much better than whatever we have today in 2024. And with much better access, with better talent and more capital, even though that if you want to compare with 2021, it's less capital. But if you want to compare with 2020, with 2013, it's a world of a difference.
Yeah. No, thank you. That's a great perspective and context. And no, we have seen everything in person. That's one of the reasons we wanted to be in Mexico City, which seems to be kind of at the epicenter of it all, at least right now. Going back to your comment about the companies that are raising more and more money in these later rounds, I think that also goes to show promise and maturity in the ecosystem as those winners are being picked that are really creating value that you can see. And investors are doubling down, tripling down on these bets and raising further rounds.
On that note, talking about raising further rounds, we'd love to hear about your guys' process, the follow-on investment process and what that looks like at 500 and how you guys think about that.
Sure. So at the very beginning, we didn't have a strategy for that.
Yeah.
Couple of years and maybe more than a couple, first 5-6 years, we didn't have enough capital to do follow-on investments, even though we want to, but we didn't have enough capital to do. So we had to choose in between more concentrated bets, but with capital available for follow-on investments, or building a portfolio with 70 something investments per vehicle. We went through that path because we believe that the stage that we invest in Latin America, the diverse portfolio that you have to build, it has to come with a little over 50 companies. So we went through that. And then today that we have capital available for follow-on investing, I would say that it's a work in progress. We have done follow-on investments in those companies that we recently invested 4 months ago, as soon as before demo day. So back in 2021, I remember one that we invested in August 2021, and demo day was happening around November. And that's a company that I was working directly with.
Yeah.
And I was helping the company within the strategy of what we wanted to do as fundraising before and after the holiday. And I was suggesting all of these different things, and I was helping, and I was calling investors as well with the founder. I had so high conviction in this company that I stopped for a second and I realized that if I'm this excited about this company and I'm helping bringing all this capital to this strategy, it's either I buy now at this price or in 2 months I buy for a higher price. So why not doing it now? So we did. And it only took us like 3 months from the first investments to the second one with that mindset. But then we really wanted to see more of the company, how they mature within more months. 3 months is not enough to get that conviction. Our conviction was based on performance, where performance is how they execute, no performance on how the numbers actually got to grow. And I would say that today, the way that we think of follow-on investment rationally is within not only that conviction of how they execute, but also putting together how things change within traction. Basically, whatever
Yeah.
I bought day one, I'm buying the same in month three. It's the same. I'm buying the team. So why doing that if I already took that debt 3 months earlier? Even though I can buy cheaper, it's the same investment rational. So 12 months after that, or a little over that, you are not doing the same investment rational.
That makes complete sense. So yeah, usually the first check is going to be based off, do you believe in the team? Do you think that this is the right team to execute on this idea? Is this a market that could be good? The follow-on check is going to be determined on, has this team been executing and making good progress on the traction over the past year? And if it does look good and it does look promising, that's what usually determines your follow-on check. I do have another question around that, which is when you're following on, like on an investment, what is your typical check size? Do you typically do between 1 to 3 times the initial investment, or is that kind of variable depending on whether you're trying to protect a certain, like a percentage in the company, or maybe buy more? Like, how can you explain that a little bit?
That has changed also within the past 3 or 4 years. At the beginning, last year we were doing as a first check $80,000. And this year we are doing $300,000 as a first check.
Yeah.
So the strategy within follow-on investing with those that got $80,000 is very different for whatever I'm going to do as a follow-on investment with the new investments that are $300,000. It also brings the company to a different stage because my follow-on in a company that I invested $80,000 last year most probably had to come in a round with other investors joining. Today, $300,000 will take that same company to a runway of 12 to 18 months. So now we can build a lot more. And whenever they come to a place where they are ready to raise the next round, then if we haven't got to that point with the first investments that we have done with this new offer, that's where we will be considering doing a follow-on. And I believe that the stage of a company that has been building without any additional capital, only hours for 12 to 18 months, it's in a different stage that whatever you got to build with $80,000, right? So again, work in progress. But in the past, when we were doing $80,000, we were able to follow on with checks from $50,000. So same check, almost same check size to something in between $250,000 and $300,000. That was very dependent on different factors, such as capital available on our side or the size round of the company. So two different factors. One is internal and the other one is external. Today, with the new offer, we will be doing follow-on investments from $200,000. So a smaller check size than the actual first one,
Yeah.
up to $500,000. And it will also have different factors as, again, capital available on our side, or the actual round size and whatever it's defined within the percentage of the company that we want to keep. So mainly thinking on not diluting our participation a lot or keeping our same participation with a follow-on investment. And also I want to add that our follow-on, I wouldn't want anyone that meets a company that we have invested in the past or in the future. My follow-on is no signaling for anything, because there are companies that I could have done a follow-on investment, but I didn't. And maybe that was because of I didn't have capital available for that strategy. Maybe whatever capital I had available, it was only for new checks. So a company that does not have a follow-on from our side is not signaling for anything. And I think that's very, very important.
No, that's definitely very important. I mean, I personally dealt with that. I've seen opportunities come up where it just was not ready at that time. But no, that's a very great point. And yeah, I think that move to the $300,000 check, I know we talked about it a little bit this summer, but I think that was incredibly smart. That was a great move because that extra runway that buys the company helps them focus on the product. And I know I've seen this like working at like some other startups, but that really helps them focus on the product for a little bit longer, not have to worry about raising money so quick. And then I think that helps you from the follow-on perspective because you get a longer time frame to evaluate the company on to really see if, and you can bet on a smaller number of companies, but with larger checks.
Correct. The way that we thought about this new offer, it was actually thinking on my two clients, my LP and the founder, right? So on the LP side, it's not actually responding to the LP, but it's basically responding to how we think of the actual returns of the fund for our LPs. And what we've learned in the past decade is that ownership is very important in order for bring good returns for each one of our funds. So what was happening in the past couple of years is that in 2013, we were investing $37,000 for 10% of a company, something that we will never see again. But we were updating our offer within this time frame, up to $80,000 last year for 8% of the company. But the reality was that, let's say 50% of our deals were taking our standard offer and the other 50% were negotiating with us. And the reason that they were negotiating with us is because in the past, there was no previous investor in that same company. And the first check, it was 500. Today, as we just mentioned, there are many angel investors that will be investing before us. So they come in with some kind of wrong way capital and maybe other valuation because of that capital. But they were negotiating with us and we were able to negotiate.
Yeah.
But when we were building this new strategy, it was like my job as a fund manager is not negotiating for lower percentages. The question that I really needed to answer is how can I go back to our original strategy where we take 10%? Because at the end of the day, within a successful company that raises a lot of capital after us, dilution will come. And that will impact directly in my returns. So how can I go back to take 10% instead of taking 5% or 6% or whatever percentage that we were taking? So that was thought on how can we go back to ownership. But second, and most importantly for the founder, with $80,000 last year in a much more expensive Latin America, especially in the main cities such as Mexico City, Bogota, Medellin, Santiago, whatever city you can think of, all of these cities have become much more expensive to live in. So $80,000 with, if my capital was the only one coming in, we'll only add something in between 4 maximum to 6 months of runway. So what you just mentioned is very important, because as soon as they got my capital last year, the first thing that they were focusing on 30 days in average after they got our investment, it was coming for us, asking for help to bring more capital in, because they were already feeling that the gas was about to, the tank was about to get empty, right? So that was the question. How can you help me bring more capital in? That, and that's a very difficult task to do, because you just bought in. You haven't helped that much. And we haven't built nothing different in 30 days than whatever I bought 30 days ago. We really want to increase runway, and also going back to a strategy where we can take 10%. $300,000 made a lot of sense. So we come in with $300,000. We bring in something in between 12 to 18 months of runway. And no one is asking, how can I help 30 days after I invested to bring more capital? Today, we're actually focusing on the right question, which is what we have to build as a company in order to have very good business fundamentals, good products, and hopefully in the near future, 6 months, 10 months from now, product market fit. And that's the questions that we are answering today, instead of how can I help bring more capital? And then maybe in 10 months, they will come for that and I will help with that. But that's going to be in the right time with what I believe is going to be a much more investable company. Hope that makes sense.
Yeah, that makes a lot of sense. And on that theme of maybe the next time bringing in more capital, I have a question for you that I think you'll be able to provide some good perspective on. No pressure. So, one of the things we've been thinking about is co-investing with specifically like international investors. What has your experience been, I guess, with, let's say, investors from the US or wherever else? Given that you're part of 500, I'm sure you have, and 500 has relationships with one or two, prominent investors. And yeah, I just wanted to hear about your experience, how it's ebbed and flowed perhaps over the past few years. What sort of guidance do international investors expect from you guys? What are the risks that they're worried about?
So co-investors, international co-investors, we have done a lot in from different categories or stages as well. So I like the combo of having someone in the cap table that is regional and local, because it has the correct perspective of the region.
Mhm.
You have seen this because you have spent a lot of time in Latin America, at least in Mexico City that I know. And you can see that our dynamics very different,
Right.
just of cultural differences in with the dynamics of the US market. So when you have a local investor in your cap table, it can bring that perspective that is very important to help a founder building in Latin America, even though the founder is from that same context. And then bringing in the international investor, I believe that is a fantastic combo. Because if that international investor has access to more capital, then that's where they will help a lot. Putting something in that maybe is not as resolved in our region than in theirs. So let me give you a couple of examples. And this is a usual question that I will get, like, how can you compete with YC or something like that, right? And with YC, we have done companies that have come with us first, and then they have gone through YC. It's like the company did their job in order to apply and get selected. But that combo, I have seen very good things happening, because then you have that context of Latin America. You have this super powerful demo day that they have where a company can raise $2 million in a week, right? Or something like that. Something that won't happen in our region. And putting those things together is super interesting to build successful companies. Then I can give you another examples that won't include YC, but we do have angel investors or other funds from either Silicon Valley, New York, or whatever that come in 2 years after we invested, and they are leading Series A rounds for our companies, and they have this ability not only in leading the round but also bringing the rest of the co-investors, and that makes the job much easier for the founder as well. So that combo, I think, is a fantastic combo to see. It's not that regular combo, but it happens, and I like it. What are the risks of our region, and what people is asking us on why to invest in Latin America and what they should be worried about? Mainly, the topic that you will hear everywhere is liquidity, and that's the name of the game today. And it's true.
Is that liquidity on the fundraising side, or is that liquidity on the exit, capital market side?
Yes, whoever invested 10 years ago, have they seen their money back with returns or not? And if I'm investing today, when am I going to see this? If whoever did it 10 years ago maybe doesn't have an answer for this yet, right? And the way that we see this is that in the past 10 years, we have been building the first part of the ecosystem. And the first part of the ecosystem required for many to invest, to take that risk, for many to be the pioneers on this. And maybe the price to pay is that it will take longer to see those returns and that liquidity, because they were investing in a very early ecosystem that did not have an answer for this. But we all were contributing into building the base of an ecosystem that today we have to have an answer for that. And I've been speaking about this topic with many co-investors, colleagues, and team members. And the way that I will describe how we all see this, that people that we've been doing this for a decade now, is that first, many people is judging results of the investments as if we were a much more mature ecosystem comparing to benchmarks of Silicon Valley. That's something that you shouldn't do, because we are not Silicon Valley.
Right.
And you have to take in consideration what it has been built by the ecosystem in the past 10 years. And it will take a little bit more time to see those results, but it will happen. And how it will happen, I don't know if I have the answer. But something that I spoke with Santiago that really clicked on me is that you can't deny that the value is created. 11 years ago, when we were starting to invest, you could deny by then that this was either possible to build or not. You could disagree with us, but today you can't. Today, the value is out there. You can see the actual value created. So there's only two ways that we see this happening in the future to have an answer for liquidity and a much successful industry for us. It's either that's fixed and we have an answer, an actual way to bring a lot of liquidity to this, or we either stop building startups. There's only those two scenarios. And since we can't imagine stop doing this because no one is going to stop, then the actual only way that we have in front of us is to have this fixed as an industry within the next 5 to 10 years. That's the only way to go. If we don't have an answer today, doesn't mean that we won't have it in a few years from now.
Yeah, that's a good point. A helpful piece of context that was offered to panelists I heard at Mexico Tech Week last week was If you just look at the timeline, the industry or the ecosystem has really only been around for the past, 15 years. And so you just got to be patient, right? The more the ball gets rolling and you see exits, the more people are going to get involved and the more momentum you're going to see. But it's just about having that patience. But that's what you would say is kind of the biggest blocker on Latin America getting to that next step is liquidity.
Yes, I think liquidity will take a lot of the pressure that many people have, or whoever is hesitant about how this works. Liquidity will remove all of these concerns. And I believe that's just a matter of time, as you just described.
Yeah. I think, like you mentioned, it's with liquidity comes just more confidence in the ecosystem as well. Because with liquidity, investors are returning their capital. They then have confidence that, okay, great, the ecosystem is like maturing. These startups are returning capital back to investors. Investors will then get that capital and they can reinvest in the community, and it just kind of snowballs from there. So we're excited for when that day comes.
Think of what I was describing for the angel investors. I said that none of them will reply that why they're doing this is because of returns. But the reality is that returns have to be part of their answer, even though it's not the first answer. Because if they see returns, then they invest more.
Exactly.
And that's what we have to do as an ecosystem. In order for the whole ecosystem to keep investing and keep building startups, then we have to produce that liquidity for everyone to keep doing this. So again, it's just a matter of time, and we are in very exciting times. I believe that, of course, I'm optimistic, and we are an industry of optimists. But still, again, you can deny the value that we have built as an industry. And I do believe that there's only two ways for this industry to go, and one is not an option.
Yeah. I mean, we're just starting to get involved and we're excited about it. I think the time is now, right? And I think there's a lot of positive signs, a lot of momentum. I saw like a lot of excitement at Tech Week last week, and it seems like it's growing. There's a lot of founders building really cool things and a ton of investors at all these events. There's hundreds of events just throughout that week. So I think that in and of itself was a good sign.
There's a ton of people out there building every single day, and we are not taking any shortcut. We are grinding, it's like hustling and doing what we have to do. And there's thousands of us out there, founders and fund managers. And of course, you will always have people that are in because of the hype. And that's fine. They will come in, they will leave, some of them will join, but then you will have some others that we are here for the long run.
Yeah. Those are the ones that build that foundation. Eventually down the road, what we're hoping to see is more capital come in from, United States, international investors. And once they start seeing exits, people are excited about more and more excited about the ecosystem. They learn more. They spend the time to learn about the ecosystem, which is kind of what we're trying to do, is help our friends in the United States learn more about the ecosystem without them having to put in too much work. So we can bring more capital here. Well, yeah, we really thank you for your time. This was an incredible conversation. Tom, I don't know if you have any other questions, but Rene, thank you so much.
Rene, your insights are invaluable. So thank you so much for joining us.
Thank you, guys. I loved the conversation as well. And thank you so much for exposing what our vision really is. And hopefully we get some people excited to come and see firsthand.
Absolutely. Vamos. Thank you for tuning in to another episode of La Frontera. We hope you enjoyed the show. You can listen to more great conversations on our Spotify, as well as on your other favorite streaming platforms. You can find us online at lafronterapodcast.com, and make sure to subscribe to our newsletter for show notes and to stay in the loop for new content. Ciao for now.